The head and shoulders pattern is not only one of the most commonly used trading patterns in technical analysis, it's also one of the most profitable one. In today's video, I'm going to show you some tips and tricks on how to trade it and get the most profits out of this pattern. So first we have to understand what the head and shoulders pattern is, and in TradingView we have this beautiful pattern drawing tool here where I can show you exactly what it's all about. So a head and shoulders pattern is when price structure creates this pattern where you have that left shoulder, you have a head, and then you have the right shoulder. Preferably, you want to have, with price, you want to have the same distance between the left shoulder and the head and the right shoulder and the head, and you want to have that equal distance. Not really necessarily, but if you look at the traditional definitions of a head and shoulder, you want to have even distance between the head and the right shoulder and the left shoulder. So this is the head and shoulders pattern where you basically have a market structure where you have a high and a low, and then you have equal lows, higher high, another equal low, and then a higher low down to equal low. So basically what you have here is, let me show you in terms of market structure, this would be a trend that looks like this. Could be something like that. Maybe that's gonna look more like this, but that could be the overall trend. So what you have here is basically an uptrend with higher highs and higher lows. And then the reason why the head and shoulders pattern is so powerful is because this is such a picture perfect market structure break. You create the higher high, and then you have the equal lows right here, which creates the first sign of a potential break of structure. And then you have another equal low, and then you create that right shoulder, which is also a lower high. And that happens also, you have this neckline. So that is the neckline of the head and shoulders. But a lot of times you will hear me talk about neckline of a W, or neckline of the double bottom, or neckline of the double top, and things like that. The word neckline comes from the head and shoulders right here, because obviously that's the neck. That's what we have, you know, in the between the right and left shoulders, we have the neck. So that's the neckline. Now there are different ways to trade the head and shoulders. You can trade it by placing sell orders here. You can have a limit sell order or stop limit sell order here that gets activated once there's a breakout, or you can use the market enter when you have the breakout. That's the breakout way of trading the head and shoulders. Most people, and this is the recommended way of doing things, is having the stop loss above the right shoulder, because remember what we're doing now with this head and shoulder pattern is we're trading going from an uptrend to a possible downtrend. So we're trading, this uptrend is breaking, and we're now potentially trading a new downtrend like that. That's why this is the beauty of the head and shoulders pattern. This just shows us a break of structure beautifully. And the head and shoulders pattern is usually what happens at the top of an uptrend. When an uptrend breaks into a downtrend without entering a range, a lot of times you will have something that looks like a head and shoulders. So you want to be entering on the break lower. You want to have your stops above the right shoulder. And for a profit target, or a target for your profit taking, you want to measure the distance from the top of the head to the neckline, and then you double that, and that's going to be your TP. Now, worth noting here is, if there's a very clear support level here, obviously you might not want to put your full profit at the double distance between the head and the neckline. So then this profit target might not be the best area to take profit on the head and shoulders. Maybe you want to take partial profits on that support, move stops to entry, and then hopefully let the trade run. But that's of course up to you and your trade management. But if you have a support level that aligns with the double distance between the head and the neckline here, then that is the perfect way to trade the head and shoulders. And sometimes the head and shoulders will be visible on the 4-hour, but you have a perfect level below on, let's say, the daily. And you know what they say, the trend is always going to be changing on the lower time frames. So if you're trading the daily, for example, and you find a head and shoulders on the 4-hour, that might be a good reason to believe that the daily trend is shifting. So this could be a really, really good way of trading that method as well. Now that is the breakout trading, okay, where you basically enter where this level breaks. What I do usually is I wait for a break, and then when you have the break, a lot of times you'll see that the breakout level gets retested. So I like to either place my limit sell orders on the possible retest of that head and shoulders neckline, or what I can do as well is I wait for the retest, and then when there's confirmation of rejection, maybe this is on the this head and shoulders might be on the daily, and then on the retest you have a 4-hour bearish engulfing candle. That's the confirmation for me, right? Maybe this is on the 4-hour time frame, and on the 1 hour or the 15-minute you have a bearish engulfing candle confirming the entry. So that's where I want to enter. Same thing here. I want to have my stop loss above the high of the right shoulder. I double the distance between the head and the neckline to the downside, and here we see the target down here, very nice 1.5 R, and this is actually quite profitable pattern. So if done right, this can actually be quite profitable. Now I want to show you something else. Also, it's interesting to note that while this is one of the most commonly traded pattern, everyone knows about the head and shoulders, and it's also one of the most profitable patterns to use in trading. I wonder why most traders are failing. Maybe that has something to do with the fact that trading is not all about technical analysis. So it's all about trading psychology, of course. Now we do have a lot of trading psychology videos on this channel as well, so make sure you check that out. We'll have more coming as well. Let's talk a little bit about a more advanced way of trading the head and shoulders. And for this, I'm going to be painting out a market structure here. If you can see, we're creating the head and shoulders pattern here. Where is the head and shoulders here? Well, we have a big uptrend right here, and then we have the downtrend here. And where do we have the head and shoulders? Well, we have it right here. And a head and shoulders can look like this as well. It doesn't have to be perfect. It might look something like this as well. The neckline of the head and shoulders pattern doesn't always have to be perfectly in line like this. It can also look like this. That one a little bit higher to the left. It can also look like this, where the neckline is a trend line. As you can see, the left and right shoulder can be equal height, but the neckline can again be sort of a trend line like this, and they can come in all shapes and sizes, and we'll see when we take a closer look at some real life examples that it can look very different. Now let me show you a trick on how you can get some really good entries using the Fibonacci tool with the head and shoulders. So when price is trading, for example, where you have that uptrend, you have a higher high and a low, and then you create that equal low, you could view that equal low as a sign that the trend might be shifting and you have a change in behavior. What you want to do is you want to go into the Fibonacci retracement tool. You want to put it at the high of the head, the top of the head, down to the low of that down move. And as you can see, we're going to settings. You can see I have the 0.618, the 0.702, and the 0.786 Fibonacci retracement level. This is known as the reload zone, or more specifically when looking at a downtrend, the short RLZ. Now what you want to do is when you look at this and you can perhaps try to anticipate a head and shoulders forming, you want to wait for price to reach into that, create the right shoulder inside this short RLZ area, or the short reload zone. And now you can trade this in two different ways, and I'm going to show you what I think is the best way of trading this. If this, for example, is a head and shoulders pattern on the daily, you want to be looking at the lower time frames, maybe the 4-hour or the 1 hour, for a confirmation of an entry, and that would be a bearish engulfing candle. Now if you go long, you can of course flip it like this, and then that would be a bullish engulfing candle. This is the inverse head and shoulders, right? And the inverse head and shoulders is just the exact same as the head and shoulders, but in reverse. This is a bottom formation, and you trade it exactly the same way, but instead of going short, you go long. Going back to the regular head and shoulders, let's say you have a confirmation of an entry right here. You want to enter inside that reload zone. You're going to put your stop loss above the high of the head, and now you have two options. You can trade this, and this is the higher probability trade, or the highest probability of getting your take profit hit, but it's going to be giving you a lower risk to reward. But that is trading this to completion. Okay, so you have the neckline down here, and you're going short inside the short reload zone, and you want to take profit on the neckline for a completion of this pattern. But you can also do the same as we did before by measuring the distance from the head to the shoulders, from the head to the neckline, and then double that, and that's your profit target on that one. Now, of course, there's a much higher probability of this level being hit than that one. So you could take partial profits here, move stops to entry, and then let the trade run. This is a beautiful way of trading the head and shoulders. And the head and shoulders pattern is such a beautiful candlestick patterns or price action pattern that gives you a good indication of a break of structure of a trend where an uptrend goes into a downtrend. And then of course you have the inverse head and shoulders where you have a downtrend going into an uptrend. Now I want to show you a live example here on Euro NZD with head and shoulder pattern, and this is a great way and a great example of showing you that they come in all sizes and shapes. What's important to understand is that the pattern is a break of structure pattern where you go from higher highs and higher lows into lower highs and equal lows. And let me show you this right here. So what we have here on Euro NZD, as you can see, let me mark this out. This is by no means perfect, but it gives you a similar feeling as the original pattern. So here you have the neckline, right? And then that right shoulder, and then it breaks down. So here you can see that you have, let me use this tool instead. You see that I have move up, a higher high, higher low, higher high, equal lows. If you see that this is resistance, if this is support, price comes down and hits that support. You can mark it out like this, hits that support, comes up and then goes down, and it retests that level right there. So here you would have the left shoulder, the head, and the right shoulder and the neckline, and then you have the break and the retest. How would we trade this? Let's see. So we would enter at the retest of the neckline, put our stops above the high of the right shoulder, and then we would measure the high of the head down to the neckline. We would double that, and that would be our TP right there. Now interestingly enough, this chart is actually inversed. So as you can see, instead of using the short tool, I actually use the long tool. And if we flip this back, there you have it. That's also a possible inverse head and shoulders. Now you can also look at this as one big double bottom pattern, and the double bottom pattern is traded very similarly to the head and shoulders as well. All right, there you have it. That's how you trade the regular head and shoulders pattern and the inverse head and shoulders, and also how you apply the reload zone to time the head and shoulders for a much better entry. And make sure you hit that like and subscribe to the channel for more technical analysis videos. See you guys in the next one.